the difference between product cost and period cost, right? Because we have two types of cost. So product costs are basically costs to make the product, right? So if you think about, let's use an example of a company that manufactures furniture, and you say the cost that they'll incur to make the product can be things like wood, fabric, paint, and all those kind of things. Those things are product costs because they are costs that are related to making the product. Without this costs, then the product wouldn't exist. And then you have period costs. So period costs are usually not related to the production process at all, right? So I'll give you an example, like accounting services. When we pay an accountant to come to our books and we're manufacturing furniture, this is not related to the production process because we might not have an accountant, but we can still produce furniture, right? So accounting services are not related to the production process. Same thing as marketing. We might be able to produce the product, have a finished product, and then we're going to hire marketing after so that they sell for us, but it's not related to the production process. So that's the key difference between product cost and period cost. And then I just want us to dive deeper into the idea of product cost, right? Because at the end of the day in management accounting, we really want to be able to cost our products correctly. Like I said, if we can cost our products correctly, we're able to set a correct price and we're able to calculate profitability much better and we'll make better decisions. So this is the manufacturing cost formula or the product cost formula. So it's made up of three things. First, it's direct material. So it's made up of direct material, and then you add direct labor, and then you add manufacturing overheads. What's the difference between these three things? So direct materials are usually materials that become part of a final product. So the nice way to think about it is if you can physically see it in the product, it's direct material. Let's go back to our example of a company that produces furniture. Like the wood, we can directly see it in the furniture, therefore that's direct material. The paint, let's say we paint the table, we can directly see it in the product, therefore that's direct material. So that's the key. Direct material are basically those materials that become part of the final product. We can directly see it, we can trace it back to the product. And then you have direct labor, same thing. These are workers who directly build or make the product, right? So if like they physically work on the product, like for example assembly workers or the people that maybe put it together and basically are involved physically in the production process, that's like direct labor, right? So if they are physically working on the product, then that's direct labor. And then you have manufacturing overheads. Manufacturing overheads are all the other factory costs that are not direct material, so are not direct material or direct labor. They are not direct material, they are not direct labor, meaning that we can't really trace them directly to the product, or we can't really physically see them in the product, and we can't say, okay, cool, how much of this resource went to the specific product. We can't directly trace it to the product. So I'll give you an example, like factory rent. So factory rent we can pay for at the factory, but we can't specifically say 10% of the rent went to this specific product. Same thing with electricity. We can't realistically say 10% of our electricity went to the specific product. So that's usually like your manufacturing overheads. These are costs that are not direct material, but at the same time, they're not direct labor, right? So they are manufacturing overheads. So it's all the other factory costs other than direct material and direct labor.